Usually when you build a bunker, you expect it to hold up during a storm, right? You just lock the door, the storm rages outside, and you're safe. For years, that was the exact narrative around Bitcoin, the ultimate macro bunker.
Yeah, the safe haven.
Exactly. But today, well, we're looking at a market gripped by extreme fear. I mean, the fear and greed index has plummeted to 10. Bitcoin is hovering near $61,000, and over 8 million Bitcoin are just currently held at a loss.
It's a brutal slide. We're looking at a 30% year-to-date drop from that massive $126,000 cycle high.
Right. So the mission for this deep dive is to analyze the forces driving this exact slide and to track exactly where that institutional capital is rotating. Because amidst the recent U.S. and Iran military escalations, Bitcoin dropped significantly. It didn't catch a safe haven bid at all.
No, it really didn't.
So is Bitcoin officially losing its digital gold narrative and just trading like, I don't know, a highly sensitive tech stock?
I mean, yes. The on-chain flows point exactly in that direction. Systematic fund managers are aggressively de-risking ahead of the upcoming CPI report and the FOMC rate decisions. They are treating Bitcoin purely as a risk asset right now.
Like liquidating it just to raise cash?
Exactly. Liquidating it to raise cash and just reduce their overall exposure.
But wait, if they are de-risking ahead of inflation reports, why are we seeing that capital flow into things like the SpaceX IPO tokenization via Bybit? Because buying tokenized equity in a private space company, that does not sound like de-risking. It sounds like doubling down on risk.
Well, is a massive rotation, not a retreat to safety. And the mechanics of how it is happening are, well, they're fascinating. Investors are actively locking up USDC stablecoins inside exchange smart contracts.
To secure those one-to-one backed SPCXX equity tokens.
Right. So to get the USDC to lock up in the first place, they have to market sell their existing Bitcoin holdings.
Oh, wow. So it is like a reservoir. The Bitcoin spot market is the reservoir, and Wall Street is literally physically siphoning the liquidity out to irrigate their traditional tech crops.
That is a great way to put it. It is the reality of opportunity cost for these hedge funds. I mean, the S&P 500 is up about 10% this year, largely driven by AI and tech demand. But Bitcoin is down 30%.
So fiduciaries literally cannot afford to sit on a depreciating asset.
No, they really cannot. So they are using Bitcoin as a liquidity donor. They are selling off crypto to chase immediate returns in traditional aerospace and AI equities.
Okay, but if the smart money is treating Bitcoin like a temporary piggy bank to fund traditional tech, why are major players pouring so much money into crypto's underlying infrastructure? Because Kraken just became the official crypto supporter for the 2026 FIFA World Cup.
Oh yeah, that is a massive move.
Right. They are going to be educating a projected 6 billion viewers about an asset class that trades 24/7. They clearly are not seeing this as a dead end.
No, they are definitely playing the long game. They are betting on structural and cultural shifts rather than, current spot prices. Because the surface level price action is ugly, but domestic tides are shifting behind the scenes.
Like with Backpack US.
Yes, Backpack US is a prime example. They are rapidly expanding their board with former SEC and CFTC commissioners ahead of a planned IPO.
So they are building compliant, institutional-grade infrastructure while the retail market is basically panicking.
Exactly. And they are timing it with changing political winds. Recent polling data shows 40% of voters now classify digital assets as a major 2026 election issue.
Wait, 40%? That is huge.
Yeah, it really is. The smart money knows the regulatory environment is solidifying. They are positioning themselves for the next cycle, regardless of what the spot price does today.
Okay, so for you, the listener, there are 2 actionable takeaways to monitor here. First, watch the daily ETF flows for signs of stabilization. And second, keep a really close eye on June 11th.
Right, because that is the date the SpaceX lockup expires. We need to see if that sequestered stablecoin liquidity actually returns to the Bitcoin order books.
Or if it just permanently migrates to other traditional equities.
Exactly. That is the million-dollar question.
It changes the whole concept of the bunker. It is less of a bunker and more of a 24-hour ATM, which leaves you with this final thought. If traditional hedge funds now utilize Bitcoin primarily as a liquidity donor to fund Wall Street's aerospace and AI IPOs, is crypto's future value actually driven by its own decentralized ecosystem, or is it permanently tethered to Wall Street's appetite for tech stocks?